Well, welcome everybody. The NDIS SDA property investing has got a lot of shenanigans in the marketplace, and there's a lot of bullshit being talked about. So allow me to show one of those things. Here's an advertisement: build an SDA home with the government will fund the rent up to $233,000 annual return. House and community support the disability community. Well, that's the very reason why I wanted to put this webinar. It is very challenging for a lot of people to look behind the curtain and to see what is really going on and to understand what is really going on. And I wanted to facilitate that because there's just too much lies and half-truth out there. All right, bit of housekeeping. As I've already proven, the virtual sessions can be challenging if technology doesn't behave. Please leave your cameras off for now. The bandwidth is not too good. When we go into the Q&A, I'd be only delighted for you all to put your cameras on. Same with the microphone. Any questions are welcome. There is a chat window in the Zoom. We are monitoring the questions. Lenny is sitting in the background. We'll take the questions down and will remind me later on. I've got till 10 o'clock, so just kidding. I will answer every question. Take your own notes. We're happy to send you the recording, so no need to take the whole recording down. Yeah, and last but not least, thank you for coming. I know your time is valuable, so even more on a public holiday in Melbourne anyway. No, it's in a federal holiday. So yeah, thank you for being here. All right, the usual disclaimer, we are talking about investment, so please do your own research and your own due diligence. Every situation, every circumstance is different. So I can only talk general. Do your own research and talk to your own advisors. What I want to go through today is how does it all work? A bit of myth busting, that's going to be the majority of the session. What else to be aware of and the solution as I see it, and then we go into a Q&A. So how does it all work? Well, I realize this structure diagram is fairly complex, and that is because the whole subject matter is very complex. So I have in the middle, I don't know whether you can see that. Can you guys give me a thumbs up or thumbs down, whether you can see my cursor? Probably not. Anyway, in the middle, we've got the participant, or as we talk in property speak, in the tenant. We have the NDIS up top. We have the occupational therapist and the support coordinator up top. On the left, we've got the SIL and NDIS. The SIL provider is the company that looks after the personal needs of the tenant, whereby the SDA provider is us. We look after the housing needs of the tenant. And of course, we have on the other side the developer for the land and the builder of the house. Property Friends is underpinning the whole thing at the bottom. So we are in a relationship with everybody. We have a rooming agreement with the participant or tenant. We have a head lease with the owner of the property. So the owner gives the head lease to the SDA provider. The SDA provider gives a rooming agreement and then leases the house room by room. Rooming agreements are quite different, and A lot of councils are deeming the NDIS properties to be boarding houses, which is completely wrong and which adds $10,000 worth of cost in the deal, because the council rates double, the water rate double, and the insurance doubles. So thank you very much. Here you go. Want to help people that are disadvantaged, and you get penalized for it. Anyway, I will be able to talk you through details of that structure diagram if you want to. At the end, I'm going to offer a 30 minutes free discovery session. We can go through anything in this presentation or any questions that you have in there. I want to keep moving, so let's go and have a bit of fun, shall we? Let's myth-bust some lies and some half-truth. Well, the first one I put under the heading, build it and they will come. Does it work? No, it doesn't. Pregnant pause. Why do I say that? Because we've tried it. We have built 5 SDAs in stunning locations, and it took us too long to fill it. The reason is that build it and they will come does not work. I'll cover more on that later. In fact, 25 to 30% of SDA rooms are currently vacant, which is a function of 1, wrong design, 2, the marketeers actively ripping people off, selling SDA properties without tenants. Whatever you do, and I'll cover that in a second, make sure that you have a tenant before you enter the deal. Okay. There is a stranglehold on the market by some big providers that are backed by insurance companies and by superannuation funds. Again, I'll talk a little bit about that. There is one very prevalent website which collects all the data of the available properties. As a participant or tenant, you register there. So they have all the data that they want of who is looking and who has got something to provide, who has got a house. They then offer the service of matching that data, and they offer to find a tenant for an SDA provider to the tune of $12,000 to $18,000 per tenant, and no guarantees that that tenant stays. So let's assume, heavens forbid, if the tenant was to having to move out of the SDA, even be it feet first, then you need to find a new tenant, you pay another $12,000 to $18,000. So this is per occurrence. That to me is highway robbery. But anyway, there is a stranglehold on the system, and there is a club of people. I'm saying that only a person-centered approach will work. Now, why do I say that? Again, we have learned over the last 4 years. By a person-centered approach, I mean having the contacts to effectively build the SDA, build the house for a specific tenant. We call that tenant or that participant the anchor tenant. What that does, and I'm preempting, what that does is it de-risks the investment. If I have one tenant that is signed up, that has signed a lease, when I enter the deal, then effectively I've got my cost covered or just about covered. As the SDA provider, I then have 8 to 12 months to find the second and or third tenant or participant. So only when you've got the contacts into the market, and there's only 4 ways to do that, will you be able to run SDA successfully, because of reasons that I'll explain in a second. The design is absolutely crucial. Don't enter into any agreements, don't sign any contracts where you have a halfway house. Why do I say that? Because we've built two. Again, we have learned a halfway house is a house that is not 100% designed for SDA use. For example, and there are 4 different categories. This is all getting too detailed, but for example, for high physical support, the category where you have people in wheelchairs that maybe even are completely paralyzed, you need to have a hoist that goes from the bed through into the ensuite to the shower and toilet. Now, that means that every bedroom must have an ensuite and a direct accessible ensuite, right? These are purpose-built dwellings with purposeful designs. Don't go halfway, it doesn't work, in as much that the providers and the participants see that and they don't want places like that because they're simply not of ultimate use. Okay, so, and I have seen, while I've got CVOs there, I've seen companies asking for changes halfway, 3/4 of the way through the building process, and $30,000 worth of contract variations were slugged to the owners to make the houses properly usable. Now, myth bust 2. You will make tons of money, they say. You will get 20% or more, they say. Fill it up with people, they say. Well, the first 2 things, well, the first one is a theoretical. If you have the ultimate and optimum constellation of 3 people at the highest rate in your SDA, yes, you can make a gross return of 20%. Now, that's when you fill up the house with 3 people that have got disability. Let me ask you a question. If you were a tenant and you're sharing a house, would you rather share with 1 or with another 2 people? Now, put on that on top that all the people that are sharing are disabled. Doesn't it make sense that 3 doesn't work? 2 is possible. More often than not, people would like to be on their own. Now, that from a funding perspective, from the NDIS and SDA perspective, usually it's very hard to get approved by the NDIS. So the NDIS, allow me to explain that, is the body that I'm getting beeped at here. It's the body that is giving the approval for the funding. The running cost of these dwellings is a lot higher than a normal property investment. I was alluding to the fact that a lot of councils are deeming these houses to be boarding houses, which means that immediately in the case of Townsville, for example, the really high rates of about $5,000 double. The really high water rates double. And the insurance goes up by a third as well. So there is the said $10,000 increased cost in running. Hence, be very, very careful what people tell you as the gross return. Don't cram the people in. It doesn't work. And look at the running cost. Then there is the compliance cost. I'm just running you through the gross to the net return. There is a humongous difference. Property friends, I didn't want to be an SDA provider, to be honest. I wanted to have that as like I want to have another hole in my head. But we decided we want quality to the end. So the only way I could provide and make sure that we have got quality to the end and service to the end is by being a provider myself. Now, just to get the approval and the procedures manual is that thick, I'm beyond $25,000. Every 18 months, I'm due for my next one now. You need to have a interim approval. That 18-month approval, audit is $7.5 grand. Crazy stuff. So I'm sure you can see now how the magnificent returns are going from gross to less and less and less in net. Don't get me wrong, there's great money to be had, and that is still a good deal. But I want everybody to be aware of the BS, of the myth, of the half-truths that are being stroked out there. The financing cost during the construction is a lot higher because we're talking typically $750,000 to $800,000 to $900,000. So it's not like your $500,000, $550,000 normal property investment. You have to put more aside during the construction for the financing, where you carry the land and carry progressively the cost of the build without having an income. There are different compensation models. Now, this is where you will make tons of money, really comes to a grinding halt. There are models of a locked-in guaranteed return, and if I give you a guarantee, then always have a look at who is giving the guarantee. Is it a shelf company? What good is the guarantee? There are companies that propose and promise a 6 years minimum guarantee, minimum income. Yes, I can do that too. But have a look at it yourself. Again, think about it. If I provide a guarantee, like with the rental guarantee, I've got to put risk factors in there. And the one thing that I hate with a vengeance is all these loadings, all this mishmash that I, as an investor, as the person who puts the money up, don't know what it is all about. Don't know how much it is. Oh no, we've got that covered. So I'm not in favor of guarantees because they eat up too much in risk monies. I'm in favor of, you are the investor, we are the investor, we ought to get all the return, right? And for that, I'm happy to take on a bit of risk. But if you set these things up properly, they work a charm. Okay, the next myth. There is a huge rental demand. Well, we have an aging population. 6% of the people that will be serviced by the NDIS will be approved for specialist disability accommodation, SDAs. That is 28,000 people. Humongous potential. Yes, there is. 3 and 4 tenants per home. I think I've covered that. Whatever you do, don't do that. We build 3-bedroom participants' homes. We, as per the standard, as per our standard, only put 2 participants in. Think about it. What is better if you put 2 tenants in, 2 participants in, and they stay for 15 years because they like it, because they get along, because it's relatively hassle-free, and for the providers also better, because they can look after 2 participants relatively safe and easy. With 3, you may need to have a second or third person. So I suggest go for 2 or even for single participant homes or duplexes. We've got some really sneaky designs that I have the copyright for. We did them ourselves because I wanted to be independent. Anyway, design is important. If I haven't said it before, I'll say it again. Don't stuff the homes. Now, from day one, No, not from day one. It's highly unlikely that you will have two people starting at the same time. That's why we have the anchor tenant that is there on day one. That covers the cost of running of the property. The second tenant usually, in our experience, needs 3 months, sometimes 6 months. So you got to look at this as a long-term plan. Now, I say to everybody in our system, in our calculations, I allow 2 weeks of rental vacancy per year. And my statement is, let's calculate the 2 weeks for 5 years, that's 10 weeks, in at the beginning. So now I've got 8 months, let's say, during construction, plus 3 months after completion. I've got 12 months, 11, 12 months to find a second tenant, or a third if it's a 3-bedroom and I want to stuff it with 3 people. Again, I don't propose and recommend that. So in 12 months, with the connections that we have and with the long-term building up of tenants and participants for our dwellings, that works. So again, that has got an influence on your cash flow. Be prepared in the first 3 months, I suggest, to not have both rooms covered. But with 1 bedroom income, which is typically $40,000 to $60,000, you have gross. There's costs that come off, but you have the cost covered. So the property breaks even, or just about breaks even, on 1 tenant participant. With 2, you make money. All right. So don't expect it from day one. Look at it as a 5-year plan. The right people. We set these properties and we select the tenants for the long term. Ideally, I want them to come in, and I'm happy to spend 3 to 6 months to find the second tenant and find the right combination of people. Because if they then stay for 10 years, 15 years, Bob's your uncle. That is the time frames that we're looking at. Are the dwellings being filled? As I said, 25 to 30% of rooms are empty at the moment. There's only 4 ways to ensure occupancy. I've been through the first one, and that is to pay $12,000 to $18,000 for the service. The second one is to have contacts to the participant themselves. We are building for 2 participants, for 1 in Hobart and for 1 in Cairns. How did that happen? Well, we've made ourselves a name of being good guys that say what they do and do what they say. We are even somewhat designing for those specific people, right? So there's a lot of ownership feeling in there. And those people sign a 3-year lease before we start building. That is where the security comes from. You've got a lease in hand, not from a guarantee of a shelf company. Anyway, so that was the second one. The third one is the support coordinator network. The support coordinator is the person or entity that looks after the management of the services for the participant. And the fourth one is the hospital system, the occupational therapists that have the knowledge of people that will require an SDA, a specialist disability accommodation, in 6, sometimes 12 months. So there's a huge lead time involved. I've said it, plan for a 5-year initial period with a selection of the tenants very carefully and the vacancy up front. And then they will be there for life, they say. Now, myth 4, it's risk-free. 100% guaranteed returns. Nothing in life is without risk. And then you start investing. It's government backed. Yes, it is. And there is red tape galore. We have had a situation where we didn't get paid, and hence the investor didn't get paid for 2 months. Why? Because the box wasn't ticked in the system, and when the plan is not approved in the system, you don't get a payment. Now we caught up, but you know, as I said to the NDIS planner, she said to us, well, you just have to wait. And I said, can you talk to my bank and tell her that? You know, banks don't wait. So have a bit of a buffer. There's, whilst it's government backed, there's also some complications in there. The plan approvals in the NDIS take an enormous long time. It is not unusual to have 6 to 12 months till the plan is approved. So there's one thing of having a person identified that applies. There's another thing to have that person approved with a plan, and then they need to have an entry and approvals for the SDA, and then they need to be entered into the system, and then if you're lucky you get money. Anyway, there are quite a few NDIA hiccups in the system. Most providers will tell you about that. It is a minefield. If you haven't got every box ticked, no payment. There are long-term tenancies for sure, and that's why we're doing it. Okay, now here comes the big one. You can get started with $60,000. BS. If anybody tells you that you can get started with $60,000, they are funding part of your deal. And they don't do that for free, is my stipulation. It's easy to get finance. No, it ain't. It's actually quite challenging to get finance. Lenders don't really understand SDAs yet, and they don't understand the income structure. Same with the valuers. The valuers go by the median. So there's 5 normal houses, let's say at $650,000. So now here comes an SDA, which needs to be equipped completely different. Wider hallways, wider doorways, every bathroom tile to the ceiling, hoists, sprinkler system, intercom, and an additional SDA room, which is the carers room. So you're quickly up to 800,000. Now they go, well, why is this normal house in this vicinity 600 to 650, and this house is 800? And they write down a value of 600 to 650. So often these things fall short depending how you do things, and I'll cover on that. So the financing option 1 is to deem the house to be a normal rental property, which is meaning that you have a higher cost, and in essence, you need to fund the difference. So case in point, let's say we've got an $800,000 SDA. Let's make my math easy. The average home is 700,000. You want to have an LVR of 20%. So that means you need to have 140,000, 20% of 700. However, that's what the bank will say. However, because the median is 700. However, the actual cost of the house is 800. So now you're short 100,000. That's what I say. And you know me as being very conservative, because it's always good when the deal gets better. It's no good when we all have issues. So I say you should have $230,000 to $250,000 in equity, or however you access the money. That is the biggest hurdle in this deal. You need quite a bit of equity. Let's go to funding option 2. There are a few very limited funders, providers, banks, providers of finance out there that will understand the game and will give you a mortgage that takes cognizance, that takes into account the much higher rent. But you better have good documentation that proves that you have tenants lined up and why you're expecting the rent. So again, quite an intricate game. You need to know the ropes. Everybody good so far? Give me a thumbs up. All right. Now, then there's the Property Friends way of funding. We are in the final discussions of talking to one of the big four. What we will do is we will tranche up 3 to 5 properties, and we will take the equity portion from the investor, and we will, on the back of the Property Friends name, arrange for the rest of the funds. It will all be above board. Every one of our investors will know exactly what's happening, will know exactly what the interest rate is and what the costs are, and so on and so forth. So no funny business, as there never is in Property Friends. But the big advantage is once you've put your equity in, say you're 230 to 250,000, sorry, Property Friends will then do the rest, and you do not have to pay interest during the construction. We capitalized that. That was something that I was able to get through with the banks. And the issue with that, and I'm gonna come back to the 230 to 250,000. The issue with that is that they only allow 65 to 70% of the completed value. So now we're back to 230 to 250,000. This is a very high return game, but also the entry level is high. And I caution everybody when people tell you you can get started with $60,000. You better really have a look at how do they do that. Good. All right. Next myth. You can build a portfolio. It's easy. Start with 120,000 and you can buy the second one in 2.5 years. This is the BS that is being spooked out there. Start with 2. And by the way, who has got, even at 120, who has got 240, and that's not going to be enough. They will ask for 100 more each. So who has got 440,000 lying around? So I want to see the people that have that sort of cash available. My suggestion is do one, as always, try it out, make sure that everybody's comfortable. And yes, you can buy a second one after a number of years. Anyway, after that, you can add 1 per year. Yeah, you can, once you've built up 3, you can add 1 per year. That is a different discussion, but I don't believe that you can build up 3 in 1 year and 3 months. Just the admin and the building time will not do that anyway. So 10 properties in 7 years, they say. Well, I want to see the person that does that. That person would have to start with $500,000 minimum and would have to be absolutely gung-ho. The properties would have to have a construction period of less than 6 months. And so I find it difficult, especially with these specialized dwellings that take more time to build. I find it difficult to see how that works. I am vastly behind time. My apologies. After 5 years, you don't have to work anymore. Well, my suggestion is if you have 3 to 4 SDA properties, yes, the income, if they're running properly, if you're working with the right people, and the money ends up with you, not in the system gobbled up somewhere in brown paper envelopes. With 3 to 4 SDAs, you should be able to retire quite comfortably. And that is what is the real attraction about this. But it bugs me that there's so many lies and so many half-truths out there. It's the same like everything where the spruikers get in and then rip the system apart, flog the system to death. It is actually great fun, and we can really provide a great service, and you can create a win-win-win-win. Where the participant wins, where the investor wins, where the people that are doing the deals are winning. But it can be all above board. I am carrying on. Myth 7, we'll pay you a net return. Well, be careful. There are a number of companies that will lock you in to the head lease for 10 years. Now, I don't know about you, but I don't do any contract for more than 3 years. And usually my first year is the only year that I contract for. Then I go for 3 or 5 year options. But I try before I buy, so to speak. Payment frequency, make sure you get paid monthly. That's the way that it should be. Fixed sum, I don't believe in that. And careful, again, when people promise you $40,000, $60,000 per year in fixed return, make sure you understand what you have to pay out of that. Because a number of companies say to you that you get $60,000, but you still have to pay for the council rate, land rates, water rights, insurance, rah, 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 rah. That then goes down very quickly to not such a good figure. After cost, what's your return after cost? That's what I would ask. So what's the net return and what are the actual costs involved and who pays for what? That's always a big one. So make sure that you know exactly who pays for what. Now, here comes the closer. Myth number 7, get in quick. The prices are rising fast. Property is selling within hours. Land is running out. And whilst I'm on the land, there are companies out there that put these things in the cheapest places in a suburb, in a town. That doesn't work. Why do I know? Because I've done one that is in the wrong location. Well, not in the wrong location, but a bit further out of town. These people have got kilometer allowances for their outings, for their entertainment, and so on and so forth. Typically, they get $6,000 a year. Now, there is a heck of a difference if you're 5 kilometers out of town to the cinema, to the entertainment, to whatever, or if you're 20 kilometers out of town. That's why the location is so, so important. Get in or you miss out. Well, we've all been there. Do your due diligence, do your research. And if somebody says to you, you only got 3 days to do that, tell them to jump. I do not make decisions of $700,000, $800,000 in 3 days. And I suggest nobody should. This is in all likelihood the biggest investment that we do, certainly next to our family home, in a long, long while. And yes, these things work. Hear me, they do work, they work well, if you set them up properly. So, and for that, you need to have time to go through. We have an information memorandum that is 30 pages that explains bit by bit what we do and how we do it. A one-page flyer doesn't cut it for me. Not for $700,000, $800,000. But that's up to you. Disclosure. If people are not prepared to tell you who gets what money, what costs go where, and what is the difference between the gross return or what is the gross income that is attracted by the SDA. And if they're not prepared to tell you what is the difference between the gross return and the net return that you get, then I would run fast. So I believe in disclosure. Here are some great questions to ask, and as I said, you don't need to write them down. We are happy to give you the presentation. How do you get paid for sourcing the deal, developing the deal, that's the supervision, registration and setup with the NDIS, really complex. You can't set an NDIS SDA up until the last day when it's finished and when it's got the certification from the NDIS certifier, different to the building certifier. Complex situation. Then it usually takes 3 months to get this approved. Nothing works fast in the NDIS. Tenant, the sourcing selection, and is that a once-off fee or is that a lifetime fee? We go and say, well, it is our task as the SDA provider to select the right tenants, and we get paid for that. Yes, I do. And I need to, because there's a whack of work involved. But I take the risk on that. We charge a fee once for the lifetime of the house. As long as you're an SDA provider with us, the fee is once. So I have the incentive to get you the right tenant, because tenant turnover hurts me and you, but me as well. So that's why I like to say that we've got skin in the game. And are there any kickbacks? Same way as always in the investment industry, lots of backhanded deals, lots of brown paper envelopes. If people don't disclose how they get paid and every detail of what money goes where, run. Now, is SDA investing the panacea? Is it the solution to all problems? Yes, it can be. As long as you have, and I know I'm conservative, as long as you have $250,000 to $30,000 to $250,000 access to it. And most of us would have access to that sort of money through the recent boom in property values. Anybody with a half-decent principal place of residence with a family home has got that money accessible. But it is a lot of money. So the returns, though, are excellent. I have got one investor now that puts in $250,000 worth of cash, and we normally calculate those deals on an internal rate of return on complete financing. Now, in this instance, it worked out as 16% internal rate of return, or some 5-year average, $40,000 per year in net after-tax income. Let me say that again. $40,000 per year in the first 5 years average, $40,000 per year in net after-tax income. Now, if I have 3 of those, if I can't live off $120,000 in my retirement, I'm doing it wrong. Sorry for saying it so strong, but that's my view. My mom is living on $30,000 pension or something in that vicinity. So yes, it is the panacea, and yes, it can set you free if done properly. The real point about what I want to tell you is you need to make sure you have tenants. You need to make sure that you've got the right team players. Is it a perpetuum mobile? Is it a machine once started that can go on infinitum? Yes, it is true, because the normal investment runs out either on cash flow or on serviceability. Now, if what I'm saying is true, and it is, and you're making a 5-year average per year of $40,000, once the banks have understood that and have seen a track record in your figures, any bank is happy to lend you more money. Now, in my calculations and in my examples, and yes, I am conservative, after 5 years, you can do a second one without putting any other monies to it. So after 5 years, you've got enough deposit out of the cash flow, put it aside, leave it separate to do the second one. And that means that you have then, when that is completed and tenanted, let's say an average of $80,000 worth of income after tax, calculated at 30% tax. Now, anybody that wouldn't make a big difference in their retirement, or some people retire on $80,000. When you've got your home paid off, you've got a decent vehicle, on $80,000, I can live very comfortably. Thank you very much. Okay, so in summary, we're on the home stretch. Strategies: get the right location, get the right design. Designs are really important. Have the right team. No anchor tenant is no good because you've got no income, so no starters from where I'm sitting. If we don't have the anchor tenant, we don't start the build. Find the right SDA provider, find the right SIL provider. Now, the SIL provider and the SDA provider is the choice and control of the participant. But you have some input in that. I would not take on an SDA where I don't agree with the SIL provider. All right? Because as the SDA provider, I'm completely and utterly responsible personally, and I can't hide behind a corporate veil, for the security, safety, and performance of the SDA. By the way, maintenance cost is another one. You as the owner carry some of the maintenance costs. The garden maintenance, for example, and minor maintenance is part of the cost of running an SDA. Be careful, understand the compensation model. As far as I'm concerned, you are the investor, I'm the investor in cases as well. So we ought to get all the money minus the expenses. And the expenses need to be known. But I don't want allowances for fat, I don't want allowances for securities, I don't want allowances for guarantees, because that stuff is all compounding, and before you turn around, you've lost $30,000. And then you get to all the compensation that the players involved get. If anybody is not prepared to tell you what they're getting out of the deal, again, our fee for service is separate to the deal. I'm happy for anybody to know what we are getting. So if anybody is not prepared to tell you what they're getting out of the deal, I would be asking more questions. As I've said, there is a discovery call that you can enter for free. I'll give you the information in a second. Allow me to, rather than me talking about myself, allow me to play a little video. Hopefully that works. And of course it doesn't. Hi, Uwe Jacobs, Property Friends, Property Strategist. I'm just here with Stefan Kasakis in lovely Townsville, a balmy 27 degrees, beautiful, love it. We've just handed the house over to Stefan, which is our first NDIS, National Disability Insurance Scheme, Specialist Disability Accommodation House. Stefan, how did the whole process go from your point of view?
Oh, it was almost faultless, and I appreciate everything that Property Friends and led by you, I guess, in sourcing the block and the design and working very closely in every aspect of the project, and most including the building process, which can be very concerning if you're not sort of doing this every day. So I really appreciate Property Friends, and it's amazing to see it in real life now, and we're very thankful for your work and your guidance and your continued guidance as the project continues into its next phase in being tenanted by the tenants that are going to live in a better quality of life. So
And that's exactly why we chose this location. We wanted to do something different, as you know, we discussed it, to have a golf course frontage to live on would be anybody's desire and makes for a nice difference. Thank you very much, Stefan.
Thank you. Thank you so much. Thank you for your comments.
Yeah, okay, so certainly a happy client, and I like it that way. I've alluded to it. You can book a no cost, no obligation. What have you got to lose? Nothing. Discovery call, we can look at your particular situation. Be careful out there. You can either scan that barcode. It should actually work also from the screen that you're looking at, or at the bottom there is the web link. Lenny, can you do me a favor and put the link into the chat, please, that people can copy it out? That would be great. All right, so we've got to the Q&A phase. Happy for you to put your cameras on, happy for you to put your microphones on, and let's have a chat. Let's, I'm a little bit over time, but as long as you're happy to, I'm happy to continue and answer any questions. Lenny, do we have any questions that came up in between?
Yeah, we have a couple of questions.
Yeah.
Does SDA provide a general standard dwelling floor plan?
Oh, good question. We have now optimized the floor plans that we're working with. That's cost me another $27,500 at this stage, because we want to optimize the floor plan not only for the participant, but also for the investor. So there are some sneaky ways. I believe we are the first company that has developed a floor plan that can serve all four categories of people. So we are now in a position where, depending on which participant is identified and is our anchor tenant, we fit the house out accordingly. So yes, it is possible to do standardized floor plans. The challenge is that you need to have more land than normal, because those houses, the smallest one that I've seen was 240 square meters. Even our designs go up to 260, 270 square meters. So you typically need a bigger block of land, and that often means that you need to rearrange the house a little bit. But in general terms, we want to optimize costing and design cost specifically, and also the SDA the SDA certification. If I can provide a standard design, my design certification cost is a lot cheaper and lower. So yes, that is entirely possible. Anything else?
Yeah, we have two more.
Yeah.
Is all SDA housing for single? Is all SDA housing for single independent participants or other families' home too?
That is a great example of how the system has evolved. The families can now join in. Imagine that you're married to a person with a disability, and you could not, till about 2 years ago, you could not stay in the same house. Absolutely ridiculous. Absolutely ridiculous. So luckily that has now been resolved, and it is possible, and there are funding models for that as well. Do we have anything else? Feel free to ask a question, guys. Put on your microphones. If you want to put your cameras on, you don't have to, but let's make this interactive. Lenny, any more questions?
Yeah. Can you help with funding and financing or point us to the right direction?
Well, we've done 2, 4, 5, 6 now. We've completed 6. Yes, the simple answer and the single answer is yes. We can point in the right direction. I will give you a referral for which I get nothing. And I do that because we're working together with people that know what they're doing. As I mentioned, I'm also in the process of tying up a deal that will advantage the investors. But I can only do that in tranches of 3 to 5 properties. The bank is simply not interested in a $1 or $2 million funding. They do a bulk funding, and that's why the risk diversification is better for the bank. And it is effectively better also for the investor, because whilst we've got a lower LVR, that is, however, on the completed value, we also don't have to pay interest during the construction. And that is a big plus, big plus. I hope that answers the question to whoever asked it. Any other questions?
All good. All I received from the participants. Or that's all I got. Thank you.
Say that again, please.
All good.
All good, we're done?
Yes.
Going. I'm sorry I took a bit more time. We started 5 minutes late, so I'm in the hour. Thanks very much for joining in. Now, I have one more, and that is this still going? No, it's not. So let me do. Oh, yeah, okay. No, I have a special offer for you. Why is this? Ah, yes, there we go. There's a resource for you. The book that I wrote normally retails for a lot higher, but with the discount code indicated, you can get it for $10. By all means, avail yourself to that. And as I said, there is the no obligation, no cost chance for you to book into for a discovery call. The QR code should work, and the website is underneath. All right. Thank you very much for participating. The recording will go to the people that attended tomorrow. Please do me a favor, don't distribute it. What I've said and talked about is reasonably sensitive. So please keep the trust there. And if I can help any of you, I'd love to. There's good money to be made, and done correctly, they're great deals. And we can help some people. On that note, have a good day. Thank you very much.